buy this festive season, and we'll see if that happens or not. Nilesh Shah is with us, MD and CEO at Envision Capital. Nilesh, good to have you with us here, and good to see you in the studios.
Thank you. Thank you, Prashant.
So let's start with autos, Nilesh. What is plaguing? I mean, stocks have done very well, so I think we should start with that context first. But these are sharp cuts.
Yeah, absolutely. I mean, clearly the competitive intensity is coming to the fore. And the bottom line is that these are businesses which probably at best will grow in mid-single digits. I mean, the Hyundai CEO came in and said that, the industry's grown over 5 years and 10 years at 5%. Now, if you have India growing at 7-8%, why would you want to buy a business which is going to grow only at 5% over the long term? I think that basically says...
But 7% inflation, so 12%.
No, exactly. So I'm just saying, I think he probably referred to probably volume sales.
Yeah. My question was, will you grow with the industry, which is growing at 5%? And he didn't really... He said, well, I'm a sales guy and I think we'd want to grow or whatever, but didn't really give a number. And I think with Hyundai, that perhaps is one of the lack of aggression. That perhaps is also...
No, I'm referring to more the industry. That individually each player will probably gain market share here and there.
Yeah.
But I mean, that's the point you're making, that if the economy is growing at 7%, do you want to be in a segment that's growing at 5,
absolutely.
6, somewhere those? I think that's a big question. But if I could just sort of ask you something on this on auto, is this just a cyclical patch because of high base, etc.? Or is this a slightly longer structural demand issue? I think that's what the debate is on right now.
So I think the end sales are cyclical. We do have bouts where for 2 or 3 years, there's like kind of very strong demand. And then we go through 1 to 2 years of a consolidation phase. I think the big question right now is that, yes, the base is high. So are we going to get into maybe a few quarters of consolidation where basically the sales just don't kind of grow meaningfully? And that gap between wholesale and essentially the retail sales, that's going to take some time to kind of get bridged. And I think that's the challenge which the entire industry and the OEM pack is going to face. I think one has to be very cautious, careful, watchful.
Hi, Nilesh. Good to have you in the studio. Nilesh, tell us, what about the IT numbers? TCS, the numbers were a little bit somber, but the street looked through that. There are other numbers that the street is waiting for. Today is going to be a big day because you have Infosys that comes out as well. And as we speak, Mphasis is up close to 5%. What is your reading of the results that we have got from the tech pack so far, and how do you approach these stocks? What do you like?
So I clearly believe, Nigel, that in the IT services pack, there's going to be huge divergence between the large caps or the big boys and the smaller companies. I mean, like TCS, Infosys, I think they'd probably grow at best low single digit, mid single digit. You're not going to see growth beyond that. And then you kind of move over to essentially the tier 2 companies, tier 3 companies, specialized players, niche companies. We had a software products company which came out with its results two days ago. They grew revenues 20% and their earnings grew 50%. That's the divergence. And when you have that kind of a divergence, it just essentially is going to remain challenging for the large cap names. No matter what you talk about AI coming in and all of that, but that's going to take many, many quarters or years probably to play out and add meaningfully to them. So I clearly think at this stage, I think the large caps are a big avoid. You essentially should not be there, especially if you're looking out for those absolute returns. You're not hugging the benchmark. And you probably are better off being in the tier 2, tier 3 names.
Any names you want to share with us from the mid-cap names?
So we've been owning LTTS, Newgen Software. These are the kind of names, Oracle Financial Services. These are the kind of names that we own. So obviously, of course, that's the disclosure. And so I think these are some of the opportunities one should kind of keep looking at.
And I think Newgen was the one that came out with a good set of numbers with regard to the growth that you spoke about. I want to ask you about 2 large cap names, and they've been not batting together, so to call it. One is HDFC Bank and the other one is Reliance Industries. Now, the index needs to move up. We need both of them to bat together and stitch a good partnership, which hasn't been happening of late. What's your view on both these 2 names? They have relatively underperformed in the recent past.
So we own both the names. We like them. The fact that they have been relatively underperformers, I think we like that. And I think in the case of Reliance, it's probably some of that corporate action which essentially can unlock value and provide the upside and bring about outperformance. I think in the case of HDFC Bank, it's just a question of them being able to kind of have the consolidation or the merger related kind of stuff behind them, and then it becomes like kind of a business as usual. The other challenge which both these names face currently is that there's, of course, a strong ownership by institutional investors. FPIs are selling right now, and they're facing the brunt of that as well, and which is leading to their underperformance. I think once we are done with that, I probably think their phase of outperformance will commence.
So you would recommend, maybe an SIP in both these two because they're large cap names, good quality companies, well-run companies. Would you recommend that?
Yeah, absolutely. I think both are companies which should be able to kind of grow in double digit in terms of their earnings. And the valuations have become meaningfully attractive right now.
Nilesh, another name which you own is Policybazaar, right?
Yes.
What after that?
No, Prashant, I think we continue to like the space. I mean, there's no, I mean, the fact that insurance is going to keep growing in double digits, it's a massively underpenetrated. And Policybazaar, like what you mentioned, we own that and we've been owning it for a while. We continue to like it. The execution is top class. The fact that they've been now publicly listed for maybe 8 or 10 quarters now, they continue to hold the market share. Ultimately, it's essentially the power of that business. And it's a phenomenal compounding opportunity.
Have you had more interactions with the management in terms of that hospital bit, which caused a bit of nervousness?
No, not.
And for new investors, does it muddy the waters or no?
No, I don't think so. I don't think so, Prashant, because I think in the overall scheme of things, it's not very material. Okay. You could think of it as essentially a bit of a distraction, but the bottom line is that it is synergistic. I think what they are trying to do is that with that investment, they're trying to see if basically the customer experience can be better and if they can do a lot more good to the entire insurance ecosystem and claim settlements and things of that kind. So I think the intent is good. The commitment is not disproportionately large, which can essentially pretty much impact the balance sheet or anything like that. And
sorry, just one. We're talking about Policybazaar. I think we're on InfoEdge. If you can have PB FinTech up, please. Go on, Nilesh, sorry.
Yeah, so continue to like it. I mean, yes, the stock has had a stellar run for the last 2 years or so. It's had a stellar run. And it might kind of consolidate a bit. But I think beyond that, I think if you still have a 3 to 5 year perspective, I think it's the best way to kind of play the insurance space and the overall financial services space.
Nilesh, on earnings overall, after many quarters, we'll probably get a single-digit growth number this time around, right? I think Motilal's number is 7% for Nifty. Things are where they are. Clearly, foreigners are not rushing to buy India right now. We're just waiting for them to stop selling. There's still a lot of domestic money sloshing around, but it's also being mopped up by these mega IPOs and all the blocks that are happening. Net, all things put together, where does it leave us? It's been a good year so far. Right. But now as you look at the next 6 to 12 months, what do you see ahead?
So I don't see the domestic liquidity going away as long as the rates on bank fixed deposits, which is the other alternative option, remain in this band of 6 to 7%, which on a post-tax will translate into 5%. So the hurdle rate for equities itself is very low. So clearly believe that domestic liquidity is not going anywhere. I think domestic liquidity will continue. In terms of earnings, yes, the H1 might kind of look to be a mixed bag, but I believe the H2 is going to be significantly better. Clearly, the rural effect, the monsoon effect, the fact that commodity prices have come off will lead to better margins. In the first half, probably election-related curbs on public spending were there. Expect the capex cycle to pick up significantly in the H2. So I probably think that in terms of growth, probably we've seen pretty much the trough or whatever on a relative basis. I think H2 from an earnings point of view will be better. So I still believe that the liquidity momentum from the domestic side will continue. The joker in the pack is going to be global liquidity, that how much more the FPIs sell, and that's a tough call to make. But at some point of time, I guess there are many global investors who are also sitting on the fence, that when they sense that opportunity, I think money will come in.
But you're sounding optimistic, so markets looking good.
Absolutely. I think markets are looking good, barring a few weeks or maybe a couple of months of consolidation. It's quite possible maybe for the rest of the calendar year, we may not have a meaningful upside, but otherwise I think it's time to start focusing on 2025, and that's looking pretty good.
Nilesh, disclosure, not to be construed as investment advice, 3 ideas for people who are watching. No, it's not investment advice, but just.
No, well, so I think... Okay, I won't give individual names, but okay, we like a payment bank. There's only one payment bank, so figure out. Yeah. That's one. 2 is, I think there's a consumer products company. It's a D2C company, which essentially the stock price has kind of fallen meaningfully.
Right.
But I think the long-term prospects for the BPC
so
space.
Fino,
I think,
Honasa, what else? Third one.
And and then third is one of the IT companies that we discussed.
He's already in Diwali mode. Already asking you for the goodies.
Yeah. But I think, Prashant, if you really look at it, I think the payment space and the consumer BPC space, these two essentially for me from a long-term perspective, I honestly don't know how the next few months or few quarters will be. But from a 3 to 5 year perspective, I think these, to us, look to be very outstanding opportunities.
Well, we appreciate you joining in, Nilesh, and giving us your take on the markets as well as on all the individual stocks and sectors that we discussed. Wishing you a good day ahead. Looking forward to chatting up with you soon.
Thanks. Thank you. Bye.
Well, let's focus on